So I think there has been a move to show that there is a desire. That's one reason why this price has been pretty stable. So I'll say when a spot Bitcoin ETF is approved, because I think the chance is already 95% or higher, but all the signs point to the fact that there could still be some details that would force the SEC to meet our ARK21 shares deadline in January. That's right, January 10th is the forcing function here. Are there times when the SEC would come up to all of us in line and say, okay, we just found out about this, we didn't know about it. We want to make all of these choices again with them? I'm not sure, but things look good so far. Cathie Wood gave her thoughts on the possibility of approving a spot Bitcoin ETF. Cathie Wood is very sure that such an ETF will be accepted. She thinks there is a 95% chance, or maybe even a higher chance. This expectation has helped keep the price of Bitcoin stable recently, which suggests investors are hopeful about the approval. Wood says that the SEC Securities and Exchange Commission might have to make a decision by January 10th, which is a specific limit set by ARK Invest 21 shares. There is always a chance that something unexpected will come up that will cause the SEC to delay making a decision. It looks like things will get better. We'll be talking about how people are looking forward to the Bitcoin ETF, why it's important, how it's affecting market trust, all while keeping an eye on the regulatory landscape and possible problems. I believe several things took place mainly. 2018 marks 5 years since the event. Cambridge Associates is a company that works as a consultant for institutions, endowments, foundations, and other groups. They wrote a paper about Bitcoin that told the institutional world, okay, you may agree with all of these leaders who are calling it a Ponzi scheme or an environmental scourge on the system. But keep in mind that Bitcoin has a very low correlation of risk and return compared to all of these other assets. It looks like we have a new type of object here. They also know that adding a new asset class is the best way to get higher yields for the same amount of risk. This is very important. Cambridge said at the time, you may not like it and you may really believe all these mean things people are saying about it, but this is how it's acting. Finally, we're making changes to the study we already put out on how much Bitcoin should be held by institutions in a broad-based strategy. This is from last year. We're about to release new numbers, but from last year, 2% of Bitcoin in your total portfolio would be the best amount to keep it from going up and down. This number is closer to 6% if you want to get the best Sharpe ratio, which shows you gain per unit of risk. And this makes some sense because I remember real estate being one of the new asset classes when I first started my job back in the 1970s and 1980s. An institution started with a 1% share and slowly increased it until it reached about 5%. Then there were emerging markets. That wasn't just one emerging market at a time, it was a new group. Once more, I began with my way up to 5%. We think that's what will happen here. It's interesting that institutions are being told by us and others that, wait a minute, this is technically set to go up to 21 million units, but we're only at about 19.5 million right now. The value of shortage is already becoming clear. That will be even more true now that institutions are starting to step in. Could we get a sell on the news? Yes, we've had a nice little burst here. Hedge funds trade on all kinds of things, including news. There might be some selling, but we think that the desire from institutions will drive the market value of this new asset class much higher. Cathie Wood gives an interesting look into how, in 2018, Cambridge. Even though many people don't trust Bitcoin, associates told the big names in finance something very important. They called it everything from a Ponzi plan to a threat to the environment. They said Bitcoin's risk and return profile is very different from standard assets, which suggests it's becoming a whole new type of asset. This is a big deal because companies know that adding new types of assets to their portfolio can help them make more money without taking on a lot more risk. In order to promote stability, Cambridge Associates even suggested specific Bitcoin allocations for financial portfolios. A small 2% could be the best bet for you. Want the best result for the least amount of risk? You might want to raise that number to 6%. This advice is similar to how other asset groups like real estate and emerging markets started out small but became important parts of institutional portfolios over time. And Wood is optimistic about Bitcoin's future, especially since it is getting close to its maximum limit of 21 billion coins, which shows how rare it is and how its value could go up. Even though short-term sell-offs could happen, possibly because of news events, this is a common strategy for hedge funds. She thinks that institutional interest in Bitcoin will only skyrocket, which will greatly increase its market value. This basically shows that Bitcoin is becoming more popular and has the ability to become a common investment asset. What is it about an ETF that makes institutional investors all of a sudden think, oh, I've been waiting for this product, this item has been on my wish list for 13 years. Many people who are into crypto don't understand that part. If these companies are bullish, why would they wait until after an ETF to buy? They should have bought a long time ago. Just what is it about the way ETFs are structured that makes them better for business flows? They had to be. Well, we did do the study and shared it with the public, but they needed the official go-ahead from the government. That will come from the SEC approving a spot Bitcoin ETF, because if it works for small investors, that's what matters. They should not rule it out as a new asset class if they think it is safe enough for them. I think that the sign of approval from the SEC, especially given how loudly the CC has said, has told us the wrong things. When it comes to crypto study at the SEC, we know the people who work there and they are great. They understand what they say. I believe that some of what we've seen out there has been based more on politics than on facts, but it has made things more difficult to understand. You would think that institutions would not want to get in the way of that kind of fight. They now have more of the courts on their side. Okay, done. Things are beginning to move in the right direction on the legislative side. I believe that all of these things give big investors, who tend to be very cautious investors, peace of mind. We've grown up in a world that cares a lot about benchmarks. They don't want to own anything that isn't also owned by a standard. The reason I started ARK is because there are a lot of great companies and chances out there that aren't in standards. Bitcoin isn't one of them. In case you forgot, this is one of the reasons I started ARK. But we needed a lot of checks and balances before institutions could really say, okay, it's safe now. Cathie Wood clears up a common misunderstanding about Bitcoin security in this smart talk. She says that the main Bitcoin network, also known as the base layer, has stayed incredibly safe. Most security holes have been found in the layers that have been added on top of it, not in the base layer itself. This is a key difference for big investors whose main concern when investing is the safety of their assets, which are usually kept in cold storage, like with Coinbase. Wood then talks about the interesting question of why big investors are waiting for a Bitcoin ETF before putting a lot of money into cryptocurrencies. As much as these buyers want to buy Bitcoin, they don't seem to be doing so until an ETF is approved. The cause allowance from regulators. Institutional investors want to see that a regulatory body like the SEC has approved Bitcoin as a safe and valid asset class. If the SEC approves a spot Bitcoin ETF, it will take away a big obstacle to investors. She says that the SEC's past actions and statements about Bitcoin were wrong and that the SEC's decision-making was influenced by politics instead of facts. However, institutional confidence is growing as the courts start to back up legislative bodies that are moving in a good way on cryptocurrency. Wood says that big investors are cautious and like to put their money into assets that are part of major benchmarks. Because of this, she started ARK Invest to take advantage of opportunities like Bitcoin that don't fit into standard investment models but have a lot of room to grow. People think that creating a Bitcoin ETF and making regulations more open to it are two important steps that need to be taken to make Bitcoin a mainstay in big investment portfolios and make sure that people trust it.